Hey everyone, welcome back to the technical analysis series. In this video, we will be going over the RSI, or the Relative Strength Index. The Relative Strength Index is a momentum oscillator, so it oscillates between 0 and 100. Anything below 30, so this area right here, would be considered oversold, meaning that sellers have come in and the selling may be overextended, or the price is just that weak and buyers are really just not even in the picture and there could be further selling ahead. It really depends on what you're looking at, what time frame you're looking at. For example, you can see here this is the RSI 14. If you change this to, let's say, the RSI 50, you may never see the RSI below 30. So there's always parameters to kind of look at, but in this particular case, we'll be going over what generally is known as the default settings. 14 as the look back period, 70, anything over that is being overbought, and then the 30, anything being under that is oversold. So to start off with, you can see here, in this particular case on January 12th, we have a period where the RSI breaks above 70 to around 74. You can see that the price is around 158 at this period, and then breaks down over the next couple days. You can then see the price actually breaks to a new high, but the RSI barely breaks above 70. You can see that this is actually kind of a downward sloping line shown by this pink line, and this is an upward sloping line, which is called negative divergence, where you're having a higher high on price and a lower high on the RSI or any other oscillator you're looking at. So whenever you have an overbought condition on the RSI in negative divergence forms, this may be signaling a reversal in the trend, which we saw here. Notice how the RSI then becomes oversold very quickly. It becomes oversold within about, let's say, 10 days or so, and it gets down to around 28. Notice how quickly the price then bounces to the upside after that. So there's times where the RSI will be very sensitive, meaning anytime it gets overbought or oversold, you'll have a quick reversal. There's other times where you may have continued grinding to the upside. In this case, our first time on May 21st, we topped out at 162. Notice how it slowly pulled back, but then kept testing this overbought area above 70, but the price continued to move up. This is what is kind of confirming the trend, and notice the trend actually continues for months to come, but then you see what's called, what we just talked about, negative divergence forming once again, where you have these higher highs on price, but then you have a lower high on the RSI, and you have quite a big reversal to the downside. You can see here that we then have positive divergence, where the RSI actually becomes incredibly oversold. There's a small bounce in price and a small bounce in the RSI. You have another pullback, but notice that the price hits a lower area here, but the RSI reverses at a higher low, and then you've got a quick move to the upside. However, this is a small dead cat bounce with a continued downward trend after that, until we bottomed out in late December here in 2018. What you can see, though, is on the longer term side of things, very similar to how we had this longer term negative divergence, we also had this longer term positive divergence forming on the price, and then compared to the RSI, we had lower lows here, higher lows here, and then this was a very strong reversal of the trend. And then, this trend has continued for quite some time now. One thing that I want to point out about this is generally, this will change as you change the inputs. So I'm not going to go into that in this particular video, but changing the input will definitely change how the RSI acts. If you lower the RSI, it's going to become more sensitive, meaning there's less periods involved, so that the RSI becomes more kind of sensitive to movements. If you have a longer RSI, let's say a 50 RSI, the RSI is going to become smoother, and you may not have as many instances where the RSI is overbought or oversold. So these are really the three main ways to use the RSI. And if you are using TrendSpider to do charting, you can create alerts for particular conditions. So for example, if you want to be alerted anytime the RSI breaks below 30, you can go to create alert, multi-factor alert. In this case, it would be RSI breakdown. We could choose an expiration of, let's say, 10 days, triggered one time, go to condition, daily, because we're on the daily candle here, and we're looking for the indicator, RSI, crossed down through the constant level of 30. So whenever this occurs, we'll get an alert either through our phone or our email. Now, the cool thing about this is you can actually test this strategy before creating the alert. And so if we test this as an entry condition, we'll see here the entry condition is the RSI crossed down through 30. And let's test that after 25 candles. So anytime the RSI breaks down through 30, what's the return after these 25 days? So if we go and test that, you'll see that the average return over 9 positions analyzed is 3.96%. And so you can actually see each individual time this occurred on the chart. So in this case, you had a breakdown of 30. Notice that you actually had quite the drawdown here before actually moving up. So if you'd like to get that information about the drawdown, that type of thing, you can always download the CSV, which will give you that information to do further analysis. Thank you everybody for watching this video and all the videos in the technical analysis series by TrendSpider. If you have any questions at all, please comment below and make sure to subscribe for future videos ahead.